Well, we started the new year on the wrong foot, if you will, with every one of the major indices down more than 1%. And that's possibly because people are looking to take some profits from the very strong end of year run in 2020, but also because of the worry about the elections in Georgia on the 5th, as well as the protests and the validation of the Electoral Congress on the 6th. So with a lot of uncertainty out there, I think investors are saying, let me take some profits while I can. Well, right now we have yet to complete the Santa Claus rally. We need to have the final 5 days of the old calendar year and the first 2 days of the new calendar year. So if we end up with a deep sell-off on the 5th, then that could end up making for a negative Santa Claus rally. It's too early to see anything as to the January barometer. The early warning signal is the first 5 trading days of January, and then obviously the month itself is the old adage, as goes January, so goes the year, but it's still too early to say what will happen. Well, I think the rollout of the vaccines will continue to provide support, especially if we end up having more people be vaccinated than we have in the recent past. But right now, I think the uncertainty is related to Washington, D.C., because if we do end up with a blue ripple, as I call it, it's certainly not a blue wave, but we still could end up with a trifecta in that the White House, as well as both houses of Congress, are controlled by the Democrats, then we might end up seeing some legislation get passed that might not get passed in a split Congress. Well, I think it depends. If the blue ripple ends up providing more stimulus in the form of checks to individuals, in terms of stimulus to small businesses, et cetera, that could be a positive. The Fed is likely to maintain very accommodative monetary policy, which should be positive for the economy. But if the Democrats start rolling back some of the regulation changes and start talking about tax increases, then that could put a damper on stock prices. I think that we probably will end up getting more stimulus spending, which could help some of the consumer areas, especially those that have been beaten up, such as hotels, cruise lines, resorts. Airlines could benefit. We could also see infrastructure benefit from the industrial area in terms of machinery, in terms of aggregates, et cetera, because if we do start repairing our roads and bridges, that would be a positive. If we do see an increase in regulation, that could be a problem on chemicals, could be a problem on energy. So we'll have to see what will be brought forth by the Democrats. Yes, I think that it's a little too early to know, because if we end up with a split Congress, then the concerns that could come even out of a very minor majority in the Senate will be done away with. So I would tend to say that a split Congress would cause investors to breathe a sigh of relief and allow the rally to resume. There's the old adage of let your winners ride. And by looking at the 10 best performing sub-industries in the prior calendar year and holding them for the coming calendar year, more times than not, you end up beating the market by a good 400 basis points plus on average. And some of those groups that have done very well in 2020, therefore could continue to do well in 2021, such as technology, hardware, such as application software, such as systems software, also electronic entertainment, the computer games, et cetera. So we could end up seeing several sub-industries do very well. Maybe the sector itself ends up keeping pace with the overall market, however. Well, Bitcoin is just another example of gambling on Wall Street. That investors, if you end up seeing double-digit % moves in a single day, whether it's up or down, is that really long-term investing? I don't think so. So it's only those people who have money to lose that should be investing in it right now.